All right, folks, we're back Monday morning. Hope you had a good weekend. About 30 minutes away from the market open. Last week, just as a recap, S&Ps were down about 1.8% on the week. Nasdaq was down 2% on the week. Again, the big theme last week was inflation. We had the CPI data that came out on Thursday with that 7.5% annual print on CPI. Worse than expected. They were expecting 7.2%. That started putting pressure on the markets. We saw the dollar rally as a result. Now, we've still got those inflationary pressures. We've still got Fed governors speaking out about it. As an example, this morning, Fed President Bullard came out and said that he would like to become more aggressive on these interest rate hikes that we're expecting to see in March, potentially raising rates by more on the front end of that curve, or the front end, and front loading some of those interest rate hikes versus spreading it out over time. So that would mean anywhere from a 50 basis point move or more in that first FOMC meeting. Now, this week, in tandem with that, we've also got rising fears about this geopolitical war between Ukraine and Russia and what that means, and whether or not we actually see these two countries going to war, as many are starting to fear. So what are we seeing on the back of that? We're seeing markets this morning in the red. Dow Jones, S&P, Nasdaq futures all trading lower. Oil, which was trading higher, has found or at least settled down a bit, trading just above $92 a barrel in WTI. And we're seeing that dollar strength again off these comments by Fed Chairman Bullard. We're seeing the dollar rally again. So we got a lot going on. Still, inflation is a risk, and any conversation around inflation, earnings is a risk. And then finally, the Ukraine Russia tensions. All right, folks, it's a new week. Let's go get it. I'll see you folks again tomorrow.